Hey everyone, welcome back to the Mortgage Reports. Today, we're tackling a question a lot of homeowners have after refinancing once. Can you refinance again? And if so, when does it actually make sense to do it? So maybe you've refinanced recently to get a better rate or to adjust your loan term, but now you're seeing new opportunities in the market and wondering if it's worth going through the process again. Let's walk through the facts and help you figure out whether a second refinance could be the right move for you. Question 1. So first things first, can you refinance a mortgage more than once? Yes, you absolutely can. There's no official limit to how many times you can refinance your mortgage, but most lenders do have waiting periods, often called seasoning requirements. A refinance replaces your current mortgage with a brand new one, meaning new terms, a new payment amount, and a new loan structure. While some homeowners refinance and stick with that new loan for many years, others find themselves refinancing again much sooner because of changing financial goals, market shifts, or just personal circumstances. The key is understanding how soon you're allowed to refinance again and whether the timing actually works in your favor. Question 2. Why would someone refinance again so soon? Well, there are several reasons homeowners choose to refinance again, even just months after their last one. Let's hit the big ones. Rates drop fast. Imagine your $400,000 mortgage at 6.6%, suddenly looking more like 4.2%. That could shave hundreds off your monthly bill. That's extra room in your budget for savings, renovations, or just breathing easier each month. Also, life changes. Divorce, a job change, new income levels. Sometimes your mortgage needs to flex with your situation. Refinancing can help you adjust payments, remove a co-borrower, or make things more manageable. Also, a better loan structure. Maybe you want to ditch an adjustable rate mortgage for the stability of a fixed one, or shorten from 30 years to 15 to pay off faster. Refinancing can also get rid of pesky PMI once you've built up enough equity. Bottom line, whether it's for savings, stability, or just simplifying life, back-to-back refinances can make sense in the right situation. Question 3. How soon can you actually refinance again? There's no single rule across all lenders, but most require some kind of seasoning period before you can refinance again. For a conventional loan, which is not backed by the government, the standard waiting period is usually about 6 months. For government-backed loans like FHA or VA, the wait is typically closer to 7 months, and you'll need to have made at least 6 on-time payments during that period. Now, if you're considering a cash-out refinance where you borrow against your home equity, you'll usually need to wait 6 months as well. So while it's certainly possible to refinance again, expect at least half a year between refinances for most loan types. Now, what are the downsides of refinancing again so soon? Even if you qualify for another refinance, it's important to pause and think about whether it actually makes financial sense. The main concern is closing costs. Every time you refinance, you'll pay closing costs again, usually somewhere between 2 and 5% of your loan amount. Let's say you paid $4,000 in closing costs on your first refinance and it lowered your monthly payment by $150. That means it would take about 27 months to break even and recover that expense through the monthly savings. Now imagine refinancing again and paying another $4,000 in fees for another $150 monthly reduction. That's another 27 months to break even. And that's on top of the time it took to break even from your first refinance. So if you're planning to sell or move in the next few years, you might end up spending more than you save. Timing really is everything. Refinancing too soon can also reset your loan term, which means starting over on a new 30-year clock and paying more interest over time. The big takeaway, don't just look at short-term savings. Think about your bigger goals. Are you actually moving forward financially or just starting over? Next question. How can homeowners decide if refinancing again makes sense? A great approach is to take a step back and look at the bigger picture. Start by checking your break-even point from the first refinance. How long will it take to recoup those costs? And have you reached that point yet? Then estimate what the second refinance would cost, not just in closing fees, but also in things like appraisal, title, and lender charges. Compare the potential monthly savings against those costs. If the new payment reduction is small, or if you're not planning to stay in the home long enough to recover the expense, it may not be worth it. You should also look at the new loan term if you're restarting another 30-year mortgage. It could mean paying thousands more in interest over the life of the loan. And finally, consider your equity position. For a cash-out refinance in particular, lenders will require that you have enough equity built up to qualify. It's also worth paying attention to the market. If rates are expected to keep dropping, it might make sense to wait a little bit longer before refinancing again. On the other hand, if they're starting to rise, locking in a new rate now could be a smart move. So, can you refinance again? Absolutely. Most of the time, you're looking at a 6 to 7 month wait depending on your loan type. But just because you can doesn't always mean you should. Think about your break-even point, your long-term goals, and whether the math truly works for you. At the end of the day, refinancing should make your mortgage more affordable and more sustainable, not just feed the thrill of chasing a lower rate. If you want to dive deeper into refinancing timelines for different loan programs, check out the full details on the Mortgage Reports website. And hey, if this video helped clear things up, don't forget to like, subscribe, and hit that bell so you don't miss the next one.